Welcome to Quick Bite, your fast and friendly Florida insurance
Hello,
update.
hello, hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Saturday, July 25th, 2026. This week, Florida insurance regulators made one thing very clear. Insurance companies are not only being watched for what they charge, they are also being watched for how they treat their customers. The Florida Office of Insurance Regulation and the Department of Financial Services are rolling out new rules aimed at consumer complaints, claim disputes, excess rate reporting, artificial intelligence, and discounts for homeowners who remain claim free. That is a lot happening at once. So today I'm going to explain what these changes mean in plain English, how they could affect your claim or premium, and why insurance companies may soon find it much harder to ignore patterns of poor customer service. Because one unhappy customer may be considered a complaint, but hundreds of unhappy customers may be considered evidence. Let's get into it. Let's begin with one of the biggest regulatory developments announced this week. The Office of Insurance Regulation is proposing a new system that would automatically flag insurance companies showing unusual patterns of consumer complaints. In the past, regulators could review complaints and order examinations when they believed something was wrong. The new proposal creates more specific numerical triggers, more numbers that trigger it. Under the proposed methodology or the proposed system, an insurance company could face a mandatory market conduct examination if its complaint ratio reaches a certain level for 3 of the previous 4 quarters. A company could also be examined if it receives at least 15 complaints during 2 separate quarters. Now, what is a market conduct examination? Think of it as a detailed regulatory inspection of how an insurance company conducts business. Regulators may review how the company handles claims, communicates with customers, processes cancellations, issues non-renewals, and pay benefits, manage complaints, and follows Florida law. This is not the same as looking at one disputed claim. It is looking for a pattern. Imagine a restaurant receiving one bad review because someone did not like the macaroni and cheese. That might be personal preference. But if it's 50 people complaining that the restaurant never serves the food they paid for, somebody from management needs to start asking questions. The same principle applies here. If customers repeatedly complain about delayed claims, poor communication, unexplained denials, or improper cancellations, the state wants a clear process for stepping in before the problem grows. A public hearing on this proposal was scheduled for July 23rd in Tallahassee, so the final details may still change. However, the direction is clear. Florida regulators want earlier warning signs and faster intervention. Some policyholders assume filing a complaint does not accomplish anything. That is not necessarily true. One complaint may not produce an immediate industry wide change, but complaints create a record. When several people report similar experiences, regulators can identify trends. For example, suppose an insurance company begins taking twice as long to respond to water damage claims. One customer may think their claim simply got lost. Another may assume the adjuster is busy. But if regulators receive dozens of complaints describing the same delay, that may reveal a larger operational problem. The new complaint thresholds are designed to catch those patterns sooner. That does not mean every complaint proves the company did something wrong. Sometimes consumers misunderstand the deductibles, exclusions, or policy terms. Sometimes a person is unhappy because the policy does not cover the loss. But a high volume of similar complaints deserves investigation. That is the important distinction. The Department of Financial Services is also expanding and and if I can speak today, modernization of Florida's mediation framework. State mediation is designed to help policyholders and insurance companies resolve disputes without immediately heading to court. Traditionally, mediation has been used heavily in property insurance disputes. The updated framework is expected to include more auto insurance claims and commercial residential claims. Commercial residential properties may include condominium associations, apartment buildings, and certain other residential properties insured through commercial policies. This could be a meaningful change. Litigation is expensive and it is slow, and it can turn a disagreement over a claim into a process that lasts months or even years. Mediation gives both sides an opportunity to sit down with a neutral third party and try to reach an agreement. Think of mediation as the adult version of saying, everybody take a breath, sit down, and let's figure this out before somebody spends $30,000 arguing over $15,000. Not every dispute will settle. Some cases truly require litigation, but if more auto and commercial residential claims can be resolved through mediation, consumers may receive answers faster and insurers may spend less money on legal expenses. Lower legal expenses can also support long-term market stability. Another proposed rule targets individually rated and excess rate property risks. These are situations where a property may be priced outside the company's standard rating structure because the risk is unusual. Perhaps the building has a unique construction type. Maybe it has a difficult loss history. Maybe it is located in an area where standard pricing does not adequately reflect the exposure. Under proposed rule 690.137.008, property insurers would be required to file quarterly reports about these policies. The reporting requirement may apply even when the company did not write a single policy in that category during the quarter. That may sound excessive, but regulators are trying to eliminate blind spots. They do not want a company avoiding scrutiny simply because an unusual risk was handled outside its traditional rate filings. The goal is to make sure individually rated policies are not being used as a backdoor for unfair pricing. This is especially important for commercial properties and hard to place residential risks, where premiums can vary dramatically. Now, let's talk about artificial intelligence. I love AI, so this is definitely right up my alley to learn how it's being regulated and how it affects insurance. Earlier this year, we discussed Florida's new requirement. Remember, we went over this where that insurance companies cannot rely solely on artificial intelligence to deny or reduce a claim, which I totally agree with. I believe that a human should make a final decision, especially if it's to deny a claim or to reduce a payout on a claim. I do not believe that AI has the capability to do that. That should be a human touch. A human should look at it because a human has more complexities. They can look at the gray, they can look at more color on it. So I do believe that a human should make that final decision. That rule is now affecting daily claims operations. Insurance companies use technology to review photos, estimate damage, identify fraud, compare repair costs, and prioritize claims. But technology also makes mistakes. A computer may identify roof damage as wear and tear when a trained adjuster sees evidence of a covered wind event. An algorithm may flag a medical bill as inconsistent without understanding the full circumstances of an accident. Under the new rules, if artificial intelligence influences a denial or reduction, a qualified human professional must review the decision and sign off on it. Florida is essentially telling insurance companies you may use the computer, but the computer cannot be the final boss. That is an important consumer protection. It gives policyholders a human decision maker who can be held accountable for the outcome. It does not guarantee the claim will be approved. The policy language still controls coverage, but it helps prevent a person from receiving a major financial decision that nobody at the insurance company personally reviewed, which I totally agree with. There is also potential good news for homeowners who have gone 3 years without filing a claim. Under the newly active Homeowner Savings and Premium Reduction Act, carriers have begun applying uniform discounts for qualifying policyholders who have remained claim free for 36 months. Major named storm claims may be excluded from a calculation, meaning a hurricane claim may not automatically prevent someone from qualifying. That distinction matters in Florida, of course, because we all know we are definitely, we had the more risk of hurricanes hitting us. Homeowners should note homeowners should not be penalized in the same way for a widespread catastrophic event that affects the entire community. The discount rewards policyholders who maintain their homes and avoided routine claims. However, I want to make something clear. This does not mean you should avoid filing a legit claim simply to protect a discount. Insurance exists to pay covered losses. If your home experiences serious damage, call your insurance company or your agent and discuss the situation. Do not let a potential discount convince you to ignore a major problem. A small discount would not repair a roof, replace a kitchen, or remove water from your living room. The goal is to reward claim-free experience, not discourage people from using coverage when they truly need it. So this is kind of similar to your auto claim free discounts that a lot of carriers give. But now homeowner carriers will start to give that same discount, which I totally agree because I do have a lot of customers who have gone 10, 20 years, never filed a claim, but they always see sometimes their premium increasing and they're claim free. And I do believe that you should get a discount for being a great customer, never filing a claim, maintaining your home, making sure that your systems are up to date and being just doing good stuff to make sure that you don't have to file a claim unless it's truly necessary. Again, if you have a legit claim, you should always call and always file it. When we put all these developments together, the theme is accountability. Regulators are watching complaint patterns more closely. More disputes may have access to mediation. Insurers may face tighter reporting requirements for unusual rates. Artificial intelligence must have human oversight, and claim free homeowners may begin receiving clearer and more consistent discounts. None of these changes will make the insurance market perfect, never. There will still be disputed claims. There will still be premium increases based on individual risks. There will still be policies that are non renewed because a home no longer meets underwriting requirements. But the rules are becoming more transparent. And transparency gives consumers a better opportunity to understand what is happening and challenge genuine problems. So, what should you do? If you believe your insurance company is mishandling a claim, begin by documenting everything. Save emails, write down the dates and times of phone calls, keep copies of estimates, photos, letters, and claim documents. Ask for decisions in writing and give your agent an opportunity to help explain the process. Your insurance agent does not decide whether a claim is approved, but a good agent, such as ourselves, me, myself, can help you understand policy language, locate claim contacts, and identify the appropriate next steps. Also, we take it a step further in our office. We definitely will get on a call with an adjuster and have a conversation. Because again, a lot of times with anything, it's not always black and white. Sometimes there's a little color in there, and the adjuster may just not know certain facts or certain things that can help them make a better informed decision. If the issue remains unresolved, mediation or a formal regulatory complaint may be appropriate depending on the circumstances. The most important thing is not to rely on memory alone. Documentation turns frustration into evidence. Florida's insurance market is entering a new phase. For several years, the focus was simply keeping companies solvent and attracting private capital back into the state. Now that the market is showing stronger signs of stability, regulators are turning more attention toward market conduct and consumer treatment. That is a healthy progression. A stable insurance company should also be a responsible insurance company. Consumers need companies that can pay claims, communicate clearly, follow the law, and explain their decisions. Because the true test of any insurance company or insurance policy does not happen when the premium is collected. It happens when the policyholder needs help. So I agree wholeheartedly with this. Insurance companies have to hold up their end of the bargain, their end of the deal. The insured or the policyholder does not have the opportunity to write the contract. All they can do is agree to the contract. So the insurance companies have the bigger duty to make sure they uphold that contract. If today's quick bite helped you understand the latest regulatory changes affecting insurance companies, claims complaints, and homeowners discounts, then that is exactly what I hope to accomplish. Insurance regulations affect the industry in ways most consumers never see until they receive a renewal notice, experience a claim, or need help resolving a dispute. If you would like to review your current policy or request a quote, please visit our website at isominsurancegroup.com, which again, I believe should be right down here on the screen over here in the corner. Preparation always beats regret. If you found this episode helpful, please like this video, share it with a friend, neighbor, anyone, and drop a comment below. This is the question to drop a comment to comment on. Do you believe insurance companies should automatically face a state examination when their customer complaints reach a certain level? I would love to hear your thoughts. Quick Bite episodes now drop every Saturday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching. I will see you next Saturday for another Quick Bite episode. Please stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.